Today, everything changed. Earlier this month, I was one of the traders expecting US dollar weakness. And why? Because of the weak non-farm payroll, because of the weak CPI, and because of the weak PPI. Three major economic releases all pointed towards a weaker US dollar. But trading isn't about proving yourself right. It is about adapting when the market gives you new information. Today, after the Federal Reserve interest rate decision and Kevin Walsh press conference, my bias officially changed. Now I'm looking to buy US dollar and sell euro dollar, you sell pound dollar, sell gold, and buy US dollar, Canadian dollar. Let me explain why. Welcome back to the channel. If you are new here, my trading style combines microeconomic fundamentals with technical analysis. I don't trade every candle, I don't trade every move. I wait for high probability opportunities where fundamentals and technicals align. And today, I believe we created one of those moments. Let's first revisit what happened earlier this month. We received one of the most weakest non-farm payroll of the month. We had uh, employment slowed, weaker consumer price inflation, inflation cooled, weak producer price inflation. Businesses also experienced lower price pressures. But from a microeconomic perspective, that was bearish for the US dollar, right? That's why I positioned for buying euro dollar, buying pound dollar, buying gold and selling US dollar, Canadian dollar. The micro data supported that view, but the market don't only respond to microeconomic data. Now, with that being said, the markets also responded to expectations, and more importantly, the markets respond to price, right? While macro story remained bearish for the US dollar, the dollar index did something very important. Take a look at what the dollar index did. This was the thesis of this is the beginning of the month, and the dollar not only hit higher than the non-farm payroll high or here, which became in weaker, and the CPI became weaker and the PPI became weaker. But the dollar after the PPI, it rallied on top without any pullback to even make this month new high. Now, with that being said, yesterday's Fed uh, press conference came in here, and I wasn't buying this. This was market noise for me. I was looking for buying opportunities to bounce from this 61.8 Fibonacci retracement zone and start looking for buying opportunities because the structure had already changed despite the weak data that came in. I hope that makes sense. Now, as soon as the structure changed, what happened? As soon as the structure changed, we had break even on the euro and the US dollar because this is the pound and the dollar. We had a buy from here. The mic we had a buy from this level right here. The market came in, gave us break even here. We didn't even want to take this because we have to let the market do what it is supposed to do. Most importantly, we had euro dollar also, which is similar to what pound dollar did, but it was straightforward more than what pound dollar did. So with the euro and the dollar, this was the thesis. This was my buying zone on euro and the dollar. And as soon as we had that non-farm payroll, we had that CPI, the move also went to the upside. We had that PPI, the move also went to the upside. But as soon as the micros was over, price came in hard against the against our signal, and we had a break even because we had a buy from here also. we had a break even, and after the break even, the structure changed. We made a new low, of course, below the month, the new low of the month, also just like in the DXY. And with that being said, we expected the bullish pullback to come in play, and after it came in play, this was the 78.6 Fibonacci retracement, where I was looking for selling opportunities, and I'm already in another selling opportunity with the euro and the dollar. And US dollar, Canadian dollar, if we might just get into this, remember this was a beautiful buy from this level right here. This was a beautiful sell. This was non-farm payroll sell, a liquidity sweep, and we managed to get inside, and we have been making lower lows ever since. But as soon as the structure changed on DXY, structure changed also on uh euro and the dollar, I knew that the strength of the dollar was picking up, and there was nothing else that is going to stop it as of now. So when this happened, I put my stop loss above this recent high as we were here, expecting that if it doesn't continue to the downside, we might just continue like this. But this spike came in, hit my stop loss from this buy, which I made 1:25 from this sell, and then the market came in again. And when this happened, I was not feeling as if I should have let this trade go on, because the thesis has already changed, and the micro, of course, has already changed, because this is where I was expecting the buying opportunities. As you can see, the liquidity sweep right here, and then the bounce to the upside is exactly what I'm expecting to reach out the highs of this month as expected also. So with that being said, let's go over to gold. Gold has been the stubborn one. Honestly, gold has been the stubborn one, because over a period of time I was looking for buying opportunities. Let's check how stubborn this was. I was looking for buying opportunities of this non-farm payroll. This was the non-farm payroll to the upside, and a loss, and a lot of break evens, no losses, because what I was looking for buying opportunities only in this. I was not looking for selling opportunities. I will only be looking for selling opportunities in a correlated market only, and I do mean only if my micro data and my technical analysis aligned. That's when I change the bias, just like today. So despite this, the CPI came in buy, but it came down again. The PPI came in buy, but it came down again, invalidating both the non-farm payrolls, the CPI's lows right here. And we had a buy from here, a beautiful one, but we had break even just right before the bullish momentum to the upside of this fake noise, because as soon as interest rate decision came in, the dollar fell and everybody was selling the dollar, sell the dollar, sell the dollar. But I wasn't interested into this, because I was more focused on the tone and what was said in the press conference. And I knew as soon as we hit this level, sell continuation to the downside would definitely be part of what will happen in the market. That is why I was waiting for this entry, and then the market just started to go to the downside. Now, traders, the only trade I managed to make 1:25 is this US dollar, Canadian dollar, and with a break, not with a break even, but by trailing stop. This wasn't luck. This is trade management at its best. Then came the Federal Reserve meeting. As expected, interest rate remained unchanged. The decision itself wasn't the story, the press conference was. Kevin Wash made several points that market paid attention close to. Firstly, inflation. Even though inflation has cooled, the Federal Reserve made it clear that they are not declaring victory. Inflation remained above target. They want greater confidence that will continue moving towards the 2%. Secondly, employment. Yes, the labor market has softened compared with earlier in the year, but the Fed still believed employment remained relatively resilient. In other words, they are not seeing enough weakness to justify a rapid shift towards easier monetary policy. And thirdly, the policy was reinforced a data-dependent approach. He avoided promising future rate cuts. He avoided giving the market a dovish guidance many traders were hoping for. Instead, the message was simple. The Fed is prepared to keep policy restrictive if inflation requires it. That is mildly hawkish for the dollar. That is just, not extremely hawkish, but it is, I would say out of 10, it is 6.5% hawkish for the US dollar. Now, you want to understand why the first move was the market noise. Immediately after the announcement, the market reacted with a bearish momentum against the dollar. As you can see, pound dollar rallied to the upside, euro dollar rallied to the upside, US dollar rallied to the downside, and gold even went to the upside, including DXY itself. It also had a strong bearish momentum to the downside. But all this was to traders before anything else. It was a pullback to take liquidity for the last time. I was not looking to sell this. Now I am looking to go with this momentum to the upside. That is completely normal to have momentum like that, because algorithm reacts to any headlines, the institution traders react to details, retail traders react to emotion. But once press conference developed, the market began repressing the overall message. That's why I consider the first move against the market as the market noise. The real move began after traders understood the Fed's tone, which is the ones that you can see right now. The dollar strength coming in, including these ones. Now, that's exactly how you trade. You don't just follow any spike that comes in. It is noise majority of the time. So where does that leave us? Why am I buying the dollar? My current bias is straightforward. I am bullish on the dollar, not because the economic report has changed it, but because the DXY itself has made a new high above here, and it is bouncing at the liquidity, of course. But also, secondly, the Federal Reserve delivered a cautious inflation-based focused message that supports keeping the policy restrictive. And number three, the market failed to extend the the dollar weakness, despite which is this despite uh, the weaker inflation data, the weaker employment data, and the weaker non-farm payrolls. Despite that, the dollar still failed to continue with this momentum overall. That tells me the market is responding to new information. Despite weaker CPI, PPI, and NFP, the market still gave the dollar an advantage over the majority of other currencies. These are opportunities that I am watching right now as we speak. We do have the DXY, of course. And with the DXY, I'm looking for continuation to the higher side, because this is the signal that was dropped, of course, in the VIP group. This is gold to the downside. This is US dollar, Canadian dollar to the upside. This is euro dollar to the downside. This is pound dollar to the downside. Now, traders, this is exactly why it is important to know what is happening, the overall direction of the markets, not just guessing the markets. That doesn't mean sell everything just blindly. The markets never move in a straight line. So rather, you wait for a pullback, your confirmation, and your entry model system that you are using. My direction has changed over a couple of days and maybe from last week. The direction may have changed, but discipline hasn't. Risk management is still more important than predicting every move. And always, I am always, and always, I do mean always, I emphasize always because you have to always be willing to adapt. If I'm going to adapt in this market, I will only adapt if the dollar loses the bullish structure, if treasury yields begin falling sharply, if inflation weakens significantly again, or if the Federal Reserve changes its tone. I'll reassess my outlook. Trading isn't about ego, it is about responding to new information. So far now, my bias has officially changed. The micro story earlier this month pointed towards a weaker dollar, but price action, Federal Reserve communications, and today's reaction have shifted my focus. The remainder of this month, for the remainder of this month, I've been looking for dollar buying opportunities, euro dollar sell, pound dollar sell, gold sell, US dollar, uh, Canadian dollar buys. Now it's simply a matter of waiting for the market to give us high quality entries. That's it. That's it, traders. You don't have to wait for much. So if you want to see exactly how I execute these setups before they happen, join my VIP signals. Inside the VIP, you will receive exact entries like I've shown, exact stop losses, take profit, break even management, live trade updates, daily Forex analysis. That includes the London session analysis together with the New York session analysis and sometimes the Tokyo analysis. Now you can join my free Telegram using the link in the description below. If this analysis help you understand why professional traders adapt instead of becoming emotionally attached to one bias, hit the like button, subscribe to the channel, and turn on notifications. I'll see you in the next market update. Bye.